Hey there, does this sound like you? Have you been told by your parents, mom and dad, grandparents, maybe aunts and uncles, bankers like me, real estate agents, that you have to buy a house to grow your net worth and build equity? Spending money on rent is far too often and incorrectly, in my opinion, thought of as wasting money. While it's true that you can gain rapid increases in net worth through real estate by buying and selling at the right times, however, in this market with 41-year high inflation, interest rates that have more than doubled since the start of the year, is now the right time to buy a house. In this video, we're going to highlight reasons that now is not the right time to buy in this housing market. That said, I own a mortgage company here in the great state of Colorado, and we do have dozens of clients just like you that are preparing their finances now to buy a home here in the next quarter to 6 months so that the market can kind of digest some of this information about these interest rate spikes that everybody is familiar with. I'm also going to give you 3 simple steps our current home buyers are taking to analyze this housing market to get a home for less than it's listed for, and how our clients are getting closing costs paid for by the seller. Bob Friel here again, and I'm a licensed mortgage broker owner here in the state of Colorado, and I absolutely love helping people just like you with their real estate and mortgage needs. On this channel, we talk about buying a house, saving money, personal finance, getting a mortgage, and living the best lifestyle. My motto is better than yesterday. Please head down and like this video, and if you're new here, please consider subscribing and have the bell clicked for notifications when new videos are uploaded. And if you stick around to the end, we're going to show you the exact next steps you need to take so that you can take advantage of a real good mortgage experience and find the home of your dreams. As of June, close to 15% of home purchase agreements fell through because buyers are backing out of their contracts, and that's according to Redfin. Now keep in mind, rising interest rates and inflation have yet to fully affect home prices, but we are seeing a softening in list prices and seeing those price reductions daily. The clients that are putting in the time 3, 6, 9 months, 12 months in advance, getting all of their, let's say, credit scores boosted, their finances in order, paying down poor consumer debt like credit cards or car payments, even those student loans, getting rid of some of that consumer debt to be able to roll that net positive cash flow by not having debt into a property or into a mortgage. Those are the clients that are actually winning. So delayed gratification just means that do your prep now and wait for the market to tell you when to jump in, because ultimately your gut will tell you when exactly that should happen. Home prices are still too high. Although the housing market is again showing signs of cooling down, it's still pretty pricey for families. About half of Americans, 49% of us, say that the availability of affordable housing in the local community is a huge major problem. That's up 10 percentage points from early 2018, according to the Pew Research Center, and that report was released at the end of 2021. So again, that report's slightly old, but again, real estate's typically a lagging indicator. Even with all of these higher inflation numbers that we get, just like the cost of living month over month, everybody's bills are more expensive, gas is more expensive, food is more expensive, of course. So interest rates still weren't even part of that factor, just for the carrying cost of like how much it costs to borrow money, which is the mortgage interest rate. It's better to be fully prepared with your mortgage approval and your budget, your finances totally completely out of the way. What most home buyers still are doing for whatever reason is they're going to see open houses. They start to look on Zillow before they truly have their finances in order, which creates an emotional roller coaster that I would hope all people would want to avoid when making one of the largest financial decisions of their life. Build better credit history, clean up credit report errors, and get rid of debt. With interest rates rising, you need to do what you can to boost and get the absolute best credit score you can during the process of financial preparation, which is like a pre-approval, getting your mortgage stuff out of the way, and the home shopping process that can happen at the same time, mind you. Getting a better credit score, if you're below 700, that should be one of the main focuses on your to-do list while you're preparing to buy a house. Lenders consider your credit score in determining the interest rate and the payment terms of your mortgage mortgage loan. The higher your credit score, the better deal you're gonna get. And I recommend, again, a score over 700. I spoke to a client yesterday that thought her credit was 800, and it turns out it was 699. I basically showed her how the credit algorithms work, and we helped her boost her score to the excellent credit range, which is above 750 instantly. Number 3, we alluded to this already, you have far too much consumer debt. The debt to income ratio is the most important factor when buying a home. Most consumers think it's just the down payment and the credit score that matter, but that's totally and completely wrong. So let's go into la la land for a second here. So imagine you're lending your own money to me, right? You're gonna wanna know, hey Bob, how much income or revenue do you have coming in each month, right? That's my pay stub, that's my income stream, whether I'm self-employed, that's my revenues. So you're gonna wanna know as a lender, what is the number of revenue or income to the household that we're starting with? Now, on top of that, the credit report score, that's one factor. Again, we just talked about that. The better the credit score, the potential better credit terms you're gonna get. Now, one other thing, which is the debt to income ratio calculation, which is the biggest killer basically of all mortgage loans. 30% or more of all denials come from the debt ratios being too high for a consumer. In this example, you're the bank. You want to have the ability to get repaid whatever amount of money you're giving me to buy this property. Yes, it's backed by the property itself, but in the event that I can't pay you back, you have to foreclose, you have to go through the rigmarole of getting the tenant out of there so that you can recapture the property and then sell it at a potential loss per market value. And to round out the list here, maintenance, that costs money too. So if we have inflation at 41-year highs, the cost of everything is skyrocketing. Housing maintenance is a pain in the living butt. I cannot stand doing housework, house maintenance, gutter work. It just seems like nothing in a house goes right when things are going wrong financially. You always feel like you get kicked in the pants when things are going the worst. So whether you perform your own maintenance tasks or hire someone else, all houses require regular maintenance. Now, I thought this was kind of a crazy little tidbit of detail, but depending on the style of housing and the area of the country that you're living in, you may pay as much to maintain your house every month as you do in homeowners insurance. If this video brought you some value and you want to know more about buying a house, go ahead, hit that like button and subscribe to the channel so you don't miss out on any of our future videos. If you're considering moving or relocating to Colorado and you're curious about how much house you can afford, what's going on in the local market here, and what next steps to take, simply click the link in the description to complete a 1-minute pre-qualification form, and we'll get you on our calendar for a Zoom chat to explore how we can help you. Now check out some of these other videos on our channel to keep that brain growing. Stay sweet.